This segment of Delmarva Life is brought to you by the Sussex County Association of Realtors.
Well, the numbers sure do look promising. The latest report on the housing market shows the number of home buyers who signed a contract to buy a home reached a 9-year high in May. So who's driving the market? The National Association of Realtors credits first-time home buyers, who represented 32% of all sales. That's up from last year's number of 27%. The association reports the median price of a home sold in May was $228,700. So why all of a sudden are first-time buyers surging the market? The association's chief economist Lawrence Young attributes it to strong job gains among young adults, less expensive mortgage insurance, and lenders offering low down payment programs. Now, let's break down our region, the Northeast, a bit more. The association says existing home sales jumped more than 11%. The median price rose nearly 5% to $269,000. But the association says supply remains tight, with 45% of homes sold in May were on the market for less than a month. So the crux of all these figures is that it's a great market for sellers. But if you're one of the people getting ready to buy, you should know that there are some new rules going into effect in October. Changes to things like the way loan estimates and closing information are given, as well as their impact on waiting periods. Joining us today to help us navigate these changes are attorney John Tarburton, lender Joe Delatorre, and real estate broker Bruce Plummer, all with the Sussex County Association of Realtors. Welcome, everyone. All right, Joe, I'm going to start with you. There's some big changes coming to the real estate world effective in October. What are they?
Well, the changes are going to be both in the disclosures we give to clients and also the timeline of a transaction. And of course, this is all designed to make things clearer to consumers. So first, the good faith estimate and the truth in lending that clients get when they apply are being condensed into a loan estimate. The loan estimate will go over lending terms that are most important to consumers. And then when we get closer to settlement, instead of getting a HUD-1, a settlement sheet, a client will get a closing disclosure. This will go over your closing terms, will mirror your loan estimate so the client can line them up and see where they started, where they ended, see if there's any differences. And most importantly, the closing disclosure will be in the hands of the client at least 3 days prior to settlement. That's a must accomplish role.
So everything is clear.
Exactly, exactly.
Okay, so John, there's a change coming in the law that was created to actually protect us after the big market meltdown. Tell me about that.
Well, in 2008 and 2009, we had a mortgage meltdown, which everybody remembers. We had the stock market crash, and we had the huge bailouts. The Dodd-Frank Act was passed by Congress in 2010, and it was designed to stop that from ever happening again. And the main change as far as mortgage lending is concerned is that it creates an agency called the Consumer Financial Protection Bureau, which takes charge of 2 federal acts, Real Estate Settlement Procedures Act and the Truth in Lending Act. And it implements them and regulates banks. All
right, and you mentioned the Truth in Information Act, and it's called TILA, and this is what it is. The Truth in Lending Act protects you against inaccurate and unfair credit billing and credit card practices. It requires lenders to provide you with loan cost information so that you can comparison shop for certain types of loans. So, Joe, how does this protect us from ballooning interests on our loans?
Well, it certainly doesn't change interest rates or what will happen with interest rates, but the concept is the consumer is better informed. So both your loan estimate and your closing disclosure, should you pick an adjustable rate mortgage, will tell you, although your payment might be this amount when you start the loan, it could go up to this amount. So it will tell you the max payment you could see. Both at the beginning of the loan, this is disclosed to you, and at the end, and it's disclosed very clearly, so that you know what you might encounter.
Taking the element of surprise away.
Out of it, right,
all right.
right. So you can pre-plan for the future.
All right. And Bruce, there are also changes in terminology.
Well, yes, you'll see a lot of acronyms. What we're talking about specifically today is TRID, T-R-I-D. The T is for Truth in Lending Act, R for RESPA, Real Estate Settlement Procedures Act. So you've got TRID, TILA, RESPA, Integrated Disclosure. This is going to produce 2 new documents. That's the main thing that consumers need to know today. At the beginning of the process, you're going to have a new loan estimate. That's Joe mentioned a second ago. You're going to see a loan estimate that's going to go into detail about the loan. At the settlement table, or consummation of the transaction, you're going to have a new form replacing the old HUD-1 that we used to have. That form is going to be called the closing disclosure. That's a 5-page document, and it will spell out all the details of the transaction. We don't like to have surprises at the settlement table. So those are the acronyms you'll see and the buzzwords, if you would.
And this really affects settlement time, doesn't it?
Well, it can. As has been mentioned previously, the 3-day window, if you provide the documents and an event should happen, you have a surprise at the last minute, and it triggers a change. Certain changes will trigger a new disclosure, which starts the 3-day clock over again. Delays at settlement, a lot of things can happen, and most of them are not good. I used to have an agent, and he always said, I don't like surprises except at Christmas time and my birthday. And so we want to make sure we're communicating with the attorneys and the lenders, the buyers, sellers, and we don't want surprises. These 3-day documents, we want them done correctly the first time, and we don't want to have to start the process over.
And John, those of us who already own a home and thinking about refinancing, there are changes there as well.
Well, you have the same 3-day notice period, and you still have your 3-day right to rescind if you refinance your home. So you have the application itself, which needs to be in the borrower's hands, the loan estimate in the borrower's hands. Then they get the closing disclosure. There's the deadline that goes along with that. And then you have consummation, which we would call settlement now. And then they have 3 more days not to decide to rescind the document. So it basically requires the borrower to have their ducks lined up much further into the future, because there's this requisite amount of time between applying for the loan and settling the transaction.
All right, Bruce, John, Joe, thank you so much for clarifying all of these upcoming changes. And if you would like to learn more about the Truth in Lending Act or anything else we talked about today with the folks from the Sussex County Association of Realtors, visit our website, wboc.com. Click on our picture at the top of the page. Well, once you do have the perfect home for you, you'll need to fill each room with all of the household items necessary for day-to-day life. But there are a few ways to make them last longer. Up next, tips and tricks to save you money at home. And we're in the Delmarva Life kitchen using a few fresh groceries of our own. We're making beer braised short ribs. Delmarva Life, we'll be right back.